The bank statement and cash book are two documents that should stand united in the realm of finance, but often they don't. Discrepancies lurk in the shadows, ready to disrupt your financial equilibrium. Why do these discrepancies occur? What dark forces conspire to drive a wedge between your bank statement and cash book? You might have guessed it, but it's not a straightforward answer. Greetings viewers, I am Joseph KB Kadzakomanja from KB Accounting Services Limited. Let's dive right into the 5 steps for bank reconciliation. But let's start with the definitions of the two important documents. The first document is bank statement. Bank statement is a statement maintained by the bank that tells you what your bank thinks you have. While cash book is a book maintained by your business that meticulously records every transaction, every inflow and every outflow. If you want to know how bank reconciliation guards your fortress, check the video with the link in the description segment. The bank statement balance and the cash book balance are meant to be equal since the two are focusing on the same transactions but being maintained by different parties. The bank statement is maintained by the bank and the cash book is maintained by your business. The differences between bank statement and cash book are caused by the following reasons: outstanding checks, deposits in transit, bank fees and charges, interest, uncleared transactions, errors. These are some of the reasons that causes the differences between bank statement balance and cash book balance. To resolve discrepancies between the bank statement and the cash book, you should typically perform a bank reconciliation, which involves identifying and explaining these differences. Most businesses do bank reconciliation on monthly basis. Businesses with more transactions do reconcile their books on weekly basis or on daily basis. Having looked at the definitions and the reasons that causes the differences between the bank statement balance and the cash book balance, let's dive right into the 5 stages for bank reconciliation. Step number 1, get bank statement, cash book, and reconciliation form. Collect your cash book and reconciliation form and obtain bank statement from your financial institution. In my case, I have the bank statement, cash book, and reconciliation form. Make sure the bank statement and cash book indicate date, descriptions, and amounts received or paid. Verify that the period covered by your cash book and bank statement matches. This ensures you're comparing the same time frame. Step number 2, tick all the transactions present in the cash book and bank statement. This helps ensure that the records in your cash book align with the transactions recorded in the bank statement. And it's an essential part of the reconciliation process to identify any discrepancies or errors. Let us start ticking. On 8 September, we have 7,376.81, and we have the same transaction in the cash book. So we are going to tick that transaction in the cash book and in the bank statement. And on 16th September, we have 100,000. That also appears in the cash book as check number 54. And we're going to tick check number 54 in the bank statement and check number 54 in the cash book. And we have cash deposit 15,500, and also the same appears in the cash book. So we are going to tick in the bank statement and in the cash book. And on 27th September, we have advertising 10,600. The same appears also in the cash book. So we are going to tick in the bank statement and we are going also to tick in the cash book. Now, if you can go through the bank statement and the cash book, we can see that there is no any other transaction that appears both in the bank statement and the cash book. You can notice that on 23rd September, we have check number 203, which also appear in the cash book as check number 203. But there is a difference in terms of the amount. In the bank statement, it has been recorded as 45,545, and it has been recorded in the cash book as 45,454. So we cannot take that transaction as a matching transaction because of that difference. If you love what you're watching, please support this channel by subscribing and hit the notification bell. Step number 3 is bank reconciliation. Now that we have ticked the transactions that are present in the bank statement and the cash book, we are going straight to do the bank reconciliation. As you can see on the bank reconciliation form, we have the balance as per cash book, and then we need that balance as per cash book to be equal to the balance of the bank statement. So we can see that for us to arrive at that balance, we need to make adjustments. And the first adjustment is we have to add what we have paid but not appearing in the bank statement. This is what we have already recorded in the cash book as paid, but if we see in the bank statement, those transactions are not there. These include unpresented checks. And also we have to add what we have received in the bank, but it's not recorded in the cash book. These amounts that we can receive in the bank but not appearing in the cash book include interest received from the bank, missing receipts, and also it can include customer payments. Customers sometimes they can do online payments without even notifying your business that they have made a payment. So once we add those two lines, we also need to do some deductions. So on deductions, we have to deduct what was paid direct from the bank but not appearing in our cash book. This can be bank charges or it can be loan repayments. And also we have to deduct what we received but not appearing in the bank statement. This is something that we received from our customers, and it can be in some sort of a check, and we presented the check to the bank, but the bank has not yet credited the check into our account. Or in other words, we are trying to mean uncredited checks or bank lodgements. So upon working on those two areas, adding and deducting, we also need to consider that when recording the transactions, we have errors. So we need to add or less errors that occur in the cash book. So errors can be omission or transposition or any other error that can cause differences between the bank statement and the cash book. Once we have made all these adjustments, then we are going to have a reconciled balance. Now let's work with the figures based on our bank statement and our cash book. Balance per cash book, we have 151,027.1. Then we're going to insert in the reconciliation form, and we have now to add what we paid but not appeared in the bank statement. You will notice that on 30th, we prepared a check number 202 amounting to 15,900.4, but it was not presented at the bank, or it's not appearing. So we are going to add back 15,900.4. Also, we have to add back what we received by the bank but not recorded in the cash book. And if you go to 20th September in the bank statement, we have transfer amounting to 25,000, paying for invoice number 210. Then you have to add that one back. So if you check, you see down there that an reconciled amount is 65,411.26. Now let us proceed. Let us look at what was directly paid from our bank and it was not recorded in our cash book. So you see that on 30th we have a loan repayment amounting to 8,760.8. Then we have to deduct that, and then we have bank charges on 30th amounting to 2,660.1. Also, we have to deduct that. Now let us look at what we received but not recorded in the bank statement. This is uncredited checks, or this is like bank arrangement. So we will see that we received a check amounting to 53,899.36. That is check number 89. So we have to deduct that amount. Now, lastly, we have to add or less any errors in cash book. So if you check all the transactions in the bank statement and the transactions in the cash book, you will notice that we have ticked all the transactions except one transaction in the cash book and one transaction in the bank statement. So that transaction we are mentioning is check number 203. That check, it was correctly recorded in the bank statement as 45,545, but it was recorded incorrectly in the cash book as 45,454. So we just need to find out the difference. So if we subtract 45,454 from 45,545, you find that the difference is 91. And since the amount was recorded less in the cash book and that was a payment, that means we need to deduct 91. Then you see that our reconciled balance is 0. That means we have reconciled our bank statement. Now we have reconciled our bank statement. You can see the balance as per bank statement is 126,516.24, and you can also see our reconciled cash book balance is 126,516.24, and we have 0 and reconciled amount. Don't be surprised if you see a bank reconciliation starting with the balance as per bank statement and then make adjustments to match the balance as per cash book. That's the same as starting with balance as per cash book, as we have demonstrated using our bank reconciliation form. Step number 4 is to check the reconciled balances. Once you have reconciled your balances, you have to check that the balances now are equal. Take note that the purpose of bank reconciliation is for you to understand the causes of the differences in balances between the bank statement and the cash book. But sometimes you might find other errors or omissions, or a transaction that is not recognized appearing in the bank statement. If that happens, you have to contact your banker to find out an explanation of a transaction you are not familiar with. If your reconciliation is not balancing it means you have made some errors and you need to restart from the first point and follow the steps, or watch the video again to understand all the steps until your reconciliation balances. Step number 5 is to prepare journal entries. You may notice that we have made a number of adjustments for us to come out with the unified balance. Now it's time to pass the journals for the transactions that we have used to make adjustments. For 15,900.4, check number 202, that one is already recorded in your system. A transfer of 25,000 for invoice number 210 is not recorded in your box. So it's now your time to record that in your box. Similarly, there are 2 payments that you also need to record: the loanly payment and the bank charges. Also, take into account to make a journal entry for the difference arising because of the error of transposition. Now we received an amount equal to 51,899.36, check number 89. That transaction has not yet credited by the bank. These transactions will be created in the next reconciliation. I hope now you understand how to do bank reconciliation. However, this is not always the case, especially when you are using an accounting software. In our next video, we will focus bank reconciliation using an accounting software so that you understand how to do it using an accounting software. Thank you for watching this video. If you have any questions, please refer to the free consultation link provided in the description segment or via email. You can also comment your question in the comment section. Please don't forget to like, share, subscribe, and hit the notification bell to stay updated. See you in the next video.